withholding tax. We want to make it really, really practical. So it'll be those real questions that you are going to come, that's going to come to you from 2027 this year, not the hypotheticals, but the real things. So I have a great accountant, great co-host with me today, Belema. She's going to introduce herself in just a second, and then she's going to take us through this space. It's going to be more of like an co-interview thing where I ask questions and then she's answering, giving us those answers. Let me also just address this top of the session. We know a lot of issues with the tax reforms, lots of, should we say, errors, duplications, and regazetting and all that. But most of what we're talking about here are not issues that were in contention even when the law was passed, right? So we're talking about just those core things, the tax rates, the exemptions, and all that. When we get to a place where we think there's been some confusion, of course, we'd mention it. But really, this tax law is here to stay, and it's good for you as an SME business owner, as a guy that's paying taxes, to understand what the taxes are going to say so that you know exactly what to do. So we're not talking now to should we say, the CEOs of large companies. Really, our target for this space is going to be that SME guy. You have a small company, you're employing 5 people, 10 people, even 100 people, and you haven't been paying the taxes the way you should have been, or you are unsure how this new tax regime would affect you. You are our target today, because we're going to be very, very practical, and I'm using the word very, very slow and deliberate so you can follow, and of course you can have those notes and you can ask your questions. So let me just ask my co-host, to introduce herself, tell us what it's all about, and then we're just going to start the session. Thanks for holding on, guys. Belema, you've got the floor.
Okay, good evening, everyone. My name is Belema Mary Maxwell. I'm here to host with Kalu, and it's a very interesting topic. And we're going to dissect it so everybody is clear. Then, just to be clear on my profession, I have my master's in finance. I have worked as an accountant because I do not have a degree in accounting. So, to put it out there, so no one misquotes I or Kalu in the future. So, yeah.
Fantastic, Belema. And again, I just put a slide up there. We're also on YouTube, guys. So if you want to just follow visuals, we're also on YouTube. We did share the link to the YouTube page. Just do FinPlan Kalu. You see YouTube. You can also follow those visuals as well. So again, overall, we're doing education, right? We're not doing financial advice or tax advice. This is more of education. So at the end, take what you've learned, go speak to your tax person, and of course, you should get more clarity on that. So we're not doing tax advice, just education. So, Belema, let me set the stage for you, Belema. This is going to be a company, right? And I'm the CEO.
Yes.
I'm the CEO of the company. I own this company.
Yes.
I own a second company, and I'll tell you about the company. But this company now is making, maybe let's just round figures so it's very, very easy to remember. It's making #1 million turnover and all that. So let's start off just by asking you, what income, I am as a person now, forget my company, as an individual now, what income is exposed to taxation, personal income taxes?
Okay, so let me start here. You're already gone through taxation and whatever thing you hold as income. If 1 million is you as a company, you make, let's say, 10 million naira turnover. Now we can talk about what is subjected to taxation. Now, but before you now go to the taxation, if you have an accountant, let's say you're Kalu, you're a business person, you have one Rex Limited as a company, and you run the both of them together, right? One thing the tax law wants you to do is the tax law wants you to separate your businesses from your personal income. So you should never, ever, there should be a China wall between your personal income and your business income. As from the 1st of January, those two things, if you used to do them before, do not do them anymore. Because if there's no clear distinction, the taxman can come for your income. So because there's a thing, the law says if you don't know accounting and you bring your statement to say, this is what I make 1 million, and from that account, this is where you spend money from. So the taxman is going to assume that all of the 1 million that's in your account is a chargeable income. So there's a need for us to separate these two. So maybe you would ask me the question again. If I'm a person, I have a business and I have a company. My business makes 10 million. What is the tax I pay on it?
Yeah,
I think maybe this should be the question.
Yeah, I want to talk about just myself now, ignoring my company.
Okay.
So let's say
just yourself.
Correct.
Yeah.
I'm the CEO. My company pays me a salary. And my company I also own shares in the company. My company also paid me a dividend. Is the salary taxable to me? Do I have to file? Is that income to me as an individual, not the company? For me now, Kalu, I'm the CEO of Kalu Company. Kalu Company pays me a salary. I also get a dividend check from Kalu Company. Do I pay tax on the salary and the dividend?
Okay, so first, before you get your salary as Kalu, your company already collected pay from it. So your income is already your net position. So you no longer pay anything from that. Then from your dividends, it's already deducted at source. So the person, the portfolio manager, before they give you your dividends, the taxes are already deducted at source. Then for your personal income that's paid to you as a salary, it's already collected. They've already collected their taxes, or your company accountant already collected their taxes via payroll on payee. So
what if they did it? What did they do? Where I'm going to Belema is this, right? Do I have to file taxes as an individual? I think I have to file.
You don't have to, because your tax has already been deducted at source. So when the company is paying you tax, okay, when the company is paying you your salary, right? Before your salary is paid, like, before Nigerians, what we do now, pre-2026, is you go to your company account and you send salaries. You can no longer do that again. It's wrong and it's illegal. You have to have a payroll. All Nigerian businesses need to have a payroll. So, Mr. Kalu, if you have a company, your company has to pay you salary, and that salary has to be tax deductible. It has to go through all the deductions, the statutory deductions, and the contributions, if the company is doing that for you. Right? So once it hits your account, the money that's coming into your account is a net position, not a taxable position anymore.
Okay.
Because before it leaves the company, it must be taxed.
Question for you is, what if the company does not do that? Do I have to file?
There are penalties. So no, you don't have to file. So now we have to, I think we're mixing two things here. You're still putting yourself as Kalu the company. You have to separate yourself from Mr. Kalu, Mr. Company, right? So if your company, let's say ABC Limited, is paying Kalu's salary, right? By the law, as of today, there must be a payroll. There must be a payroll that that your accountant, if you're the one that's doing it yourself, you must make the deductions, right? And then you must pay your tax. If it's a company, if your company is paying you salary, you must fall under the paye rule, the paye band. So you must go through that paye band before you pay yourself salary, which is the payroll. I think Nigerians have not been talking a lot, or we're not using payroll as a law before in Nigeria. But from January, whether it's already the law, you have to go through payroll, and payroll constitutes of the statutory deductions and the statutory contributions. Companies pay you money. Once it hits your account, it's a net position. You no longer pay tax anymore.
I get
unless you do not have an accountant.
No, I get that.
Yes, unless you do not have an accountant.
Yeah, the point I'm trying to make is this, right? The company has paid the taxes and it has come to me as a net position. But
no, you don't pay anymore.
I get you, but do I have to file? Is the question. Do I have to file a tax?
No, you don't have to file, because you personally do not have to file, because the company is paying you, but your company will file tax. Your company will now file CIT. So under the CIT in the accounting, everything that the company paid to employers is deducted.
Okay.
Do you understand? So you as a company will file the company CIT tax, but your company has already deducted pay from you.
Okay.
Do you get?
Understood.
Yes.
So now what about my income? Let's say I own, I'm asking this question on purpose. Let's say I own a cocoa exporting company. I own that cocoa exporting company 100%, right? The cocoa exporting company gives me ₦1 million return. I do export cocoa, I get ₦1 million. That's my dividends or income from that company. Is it taxable?
Okay, so let me get you straight. Let me get you correctly. You have a cocoa company, right? And you make profit. You're asking if it's taxed, isn't it?
Correct. Do I pay tax on that profit from exports of cocoa?
because
Why?
federal government is trying to make exports. It's trying to make exports, what is it called, attractive to Nigerians. We want to bring foreign inflow into the country. So federal government is saying that there are things that are tax exempt in the exporting, in this exporting category. So if you're doing those activities that fall under the tax exempt category for exporting, then all of the proceeds that come from there is 100% tax exempt.
Okay.
But there's a caveat. There's a caveat there, which it says that if you're engaging in this exempt category, you must make sure that the financial activities you're doing, whatever thing you're doing there, if you're farming or you're exporting cocoa, let it be that if it's cocoa or any other cash product, it's 100% under the exempt category. If it is not 100% under the exempt category, so let's say maybe you're farming cocoa and you're farming what is it called, carrots, for example, you're exporting carrots or you're exporting cashew, and it doesn't have the exempt. It's an example. It doesn't have the exempt position. The other thing that you're also doing as an activity, financial activity, should be 25% or less than 25% for you to have that exempt status. So if you're doing another activity in that exports category that is not under the exempt list, and then you now mix them up, and maybe the other one is 40% of your activity that you're doing, and the other one is 60%, you do not meet that category anymore to get the 100% tax exempt.
So let me understand what you're saying. So if the export is on that list, for instance, cocoa is on that list, I can claim 100% exemption on the income from cocoa. But carrots are not on that list. So even if I export carrots, I can't claim carrots because carrots is not on the list. That's what I hear you say.
Yes, you cannot claim carrot. And then let it be that the carrot activity is not more than 25%.
So can I claim 25%?
If it's less or 25%, then you can still fall under the 100%. So the activity altogether is 100%. Let's say one part is 75% and the other part is 25%. You still fall under the tax exempt category. But let's say maybe your carrot business is so big that it's 30%. Then you no longer fall into the category. The government is going to charge you outrightly as they charge everybody. You no longer exempt category. You have to stick to that product. You don't mix it.
Okay, understood. So again, the learning point for me here is that I have to get that list of export activities that qualify.
Exactly.
And I think that list has to do with sports, education, agriculture. Sports, education, agriculture. I did. What about if I just go ahead?
Okay, so no, that list for exports is not sports, it's agriculture mainly. But this sports own is on, I think you're touching on the point of what is it called? People that are exempt from VAT.
No, I'm
people
saying
that are exempt.
No. What I'm trying to say is this, right?
Okay.
Like for me, right? So I am the CEO. The law is saying that if I do certain activities, say dividends received, I'm quoting the law now, dividends received from investments in wholly export-oriented business or profit of non-oil companies in respect of goods exempted are, if you export goods and you repatriate it through official channels in Nigeria, the law is saying you will not be taxed. It says wholly export-oriented businesses. So in that list, it's talking about sporting, religious, educational, then agriculture. Agriculture has a 5-year, no taxes holiday, 5-year, no tax holiday for agriculture. Whether it's carrots or cocoa, you have 5-year. But wholly export-driven activities are exempt from taxes. That's what I'm reading.
That's what you're reading. Okay, so what I get from that is, let me check my slides that I prepared, is that you have the exempt list for the export category, but you cannot mix it. Like, even if you're doing cocoa now, it has that status of 100% export, right? But if you're now mixing cocoa, your activity has to be fully on that category list that the government says is exempted from it. If you mix it up with something, another product, even in agriculture, that is not in the exempt list, then that means that you're mixing your activity together, even though it's exports.
Okay, understood. Just so let me just also again, I get that point now. So like I know in the law, this is not talking about the person. This is talking about Kalu, not Kalu company. Kalu. If Kalu gets an interest dividend from outside Nigeria, it's exempt. So if, for instance, I own a property in America, and that property in America pays me dollars, and I bring that dollar back to Nigeria through approved channels, the law is saying that I don't pay tax on that. So dividends, interest, rent, royalty derived from outside Nigeria and brought into Nigeria through approved channels, I don't pay tax. It says dividends received from investments in export businesses, I don't pay tax on that. It's saying dividends from collective investment scheme. So I go and buy an ETF or a mutual fund in Nigeria, I don't pay on that. It's saying if I do a profit, if I invest in a sporting, so if I own a Yimba, a profit of a company engaged in sporting activities, I don't pay tax on that. If I also buy federal government and state bonds, the coupon income, I also don't pay tax on that. So again, for Kalu, not Kalu company, we're going to come to Kalu company now. For Kalu as an individual, these are all my passive income strategies that I don't pay tax on, right? Okay, perfect. It's already just to clarify before we go into the company.
Yes, you're correct. Yes.
Okay, let's jump into the company now. The biggest question before you go, I'm going to ask you this question. If I receive money into my bank account, do I pay tax on it? If I get 10 million into my bank account?
No.
Explain to me why.
No, you do not pay tax. Because government does not tax your bank account. No, they don't. The only thing government tax is, this is where you file your tax, you can be taxed. But your personal accounts, government do not look into it. It doesn't concern them. Government do not tax gifts. Your gifts.
Okay, how will they know it's a gift? How will they know it's a gift? This is a question. Okay, I'm asking what people ask me.
Yes, I know, it's your personal account. It's your personal account. It's not a business account. Right? So if the person that is paying that money to my brother, or 10 million to my sister, 20 million to my sister, it's a gift, right? Then it's a gift. And it's in my personal account. Money is in my personal account and not looked into. But if, let's say, the money is like 50 million, when it gets to that point where they say you need to pay, what is it called? You need to pay your CIT. Now, the tax man is not really clear. If you look at the administrative law, the tax man is not really clear on what they will do or how they will go into your account. I think this is what is subject to. People are saying that the tax is not clear. The tax law is not clear. The administrative law is not clear on that. And I think when Ayodele spoke, he said they are not going after small people, they're going after big people, right? So they did not specifically say if you receive 50 million, then the government is going to call you. The taxman has the authority to call you, send you to courts, and still put penalty on you, and you will pay while you're going to court. So this is at the discretion of the taxman. But let's say your money is not hitting the threshold that hits the red flag, then nobody comes for you. Okay. Let's say maybe you get 5 million regularly, okay, that's fine. But if you start to have 100 million in your personal account, the taxman might come to you. And in fact, the bank might report you. Because now they say in the administrative law that banks are now required by the law to report suspected cash activity. Do you understand? So at the end of the day, it depends on the volume of money that goes into your account. And it's also at the discretion of the taxman to say, okay, we're going to call so-and-so to explain to us or tell us where this money is coming from and why you're receiving the money. So the taxman is not clear on who does that or who they will call for that. So absolutely, they do not tax your account. No.
So the learning
they do not tax your personal account.
The learning point is do not mix your personal accounts
Exactly.
Do not do that.
Exactly.
So if I'm
do not do that.
So anything personal goes to my personal account. Anything business goes, okay.
Goes to your business account. And if somebody is giving you money, that's a gift. If it's 100 million, they should put it there. That is a gift.
And it goes to my personal account.
And it goes to your personal account. When it's a gift, it should be a gift.
Okay. Let's go. So in terms of the exemptions for the individual, I think that there are some these 5 categories. There's rent, which we know is it now 500,000 or 200,000? Again, clarify.
Are you talking about pay?
Yes, I'm back at pay now. So if I pay rent of 5 million, is the cap 500?
It's capped at 500,000.
500,000.
It's capped at 500,000. So whether you pay 5 million or not.
Okay, so there's rent. I can claim my rent. I can pay for life insurance for myself and my wife and get deduction for the premium. I can buy National Housing Fund. I can do National Health Insurance Scheme. What's the last one? I can do retirement savings account. So this outside this 5, is there any other above the line deduction to reduce my income outside this 5?
So as a freelancer, this is I'm thinking you're self-employed, right?
No, just as for Kalu, just Kalu, no limited, no incorporation.
So it's Kalu self-employed.
Kalu
self-employed.
Correct.
Okay, so you're self-employed. Okay, so yes, there are business deductions for you. The same that you use in making, like anything that falls into financial activity. So let's say Mr. Kalu as a person, you use 10 million naira to make your business operations in a month. Let's say maybe you buy utility, okay, let me use this practical example. Mr. Kalu works in his house because he's a freelancer, right? You cannot just say, okay, because I'm a freelancer, the utility bill, you will not take all the utility bill or all the lights bill and give to taxman. Taxman can collect it, taxman cannot collect it, because they say that it has to be wholly business. So when you're using part of your house that you live in for business, you cannot just put all of that deductions into your taxation.
Okay.
Yes, you cannot. So you have to partition it and it has to be clear. So the thing is who is the taxman looking for? Are they looking for small fish or they are looking for big fish to fry? If they're looking for small fish, then it's going to come for you. But if you do all your business deductions, for example, your utility, your internet, for people that even pay for, let's say you pay for training, you can deduct that. You pay for what is it called? You pay for maybe all these people that do graphic design, and you have all these your accounts that you pay for, and you have receipts. Okay, by the way, you cannot make any deduction without receipts.
Okay.
Any deduction you want to make must be backed with a receipt. If you don't have a receipt, I'm sorry, the taxman doesn't take you seriously.
Is this going to be a paper receipt or digital receipt?
No, it is okay. So the administrative law is talking about physicalization, right? It says that everybody, they want to enforce physicalization, meaning that every receipt has to be digital. They want to see it digitally, right? So as a freelancer, you have to upload your digital receipts and show that, okay, if you want to deduct, maybe you pay for Figma, for example, because you're a graphic designer, then you have to put your Figma receipts where you pay $20 every month, right? So you put it there and then you can deduct it. Without a receipt, you cannot deduct it.
So let me say, so Velma, hold on again. Just so somebody's saying we should slow down. Somebody's saying we should slow down so they can follow, right?
Sorry.
So somebody's saying we should slow down. Okay.
I'm very passionate. I'm sorry.
Okay. So there's a question for you. So if I buy diesel, I'm at home. I use diesel, of course, at home, and I also do for my computer. That diesel receipt the man gives me, it has to be digital, or how does that work? Give it to me practical. How does that digital receipt?
It has to be digital. You take your receipt. It has to be digital. So if you go to buy diesel, they give you your receipt. I'm sure filling station gives it to you. You snap it and then you take it. You upload it when you're doing your filing. Okay. So as an individual, you file, I think, once a year. You file once a year. So when you want to file that year, you take all of your receipts. Everything that you want to deduct, it needs to have a receipt. If no receipt, you cannot deduct it because you cannot prove that it's an expense. And then if you're staying from your house, maybe your house is, you pay, okay, I'll not talk about rent because already in the law, it's already capped at 500. So whether you say I use my house for business, the law does not let you take more than 500,000. So whatever it is, whether business or not, you cannot do more than 500,000. So the rest is for the other bills. So any other thing you use in making that money is regarded as expense.
Okay.
Business expense.
So the learning for me here is that I have to take photo of the receipt, take a picture or scan it.
You have to take photo of the receipt
and keep it. Okay, that's a big because many people that do business we don't do this. So this is important.
Everybody needs to do it. Yes,
okay.
Everybody needs to do it.
All right. So
with that you can reduce your tax.
With that, you can use your Okay, fantastic.
Yeah, you can reduce your chargeable income.
Okay, should we move to the company now?
Yes, we can move to the company.
Let's go to the company. First thing, let's look at income statement. The first thing on the income statement is going to be revenues, right? What can we say about revenues for a company in terms of this new tax regime? First of all, what qualifies me as a small company to pay tax or the exempt? Give me that number. Is it 100 million? What qualifies me to pay tax or not to pay tax?
As of today, we're not sure, because if the law is still in dispute, what the House passed versus what the president assented to, we don't know. So another copy is saying is 50 million and 100 million. Another copy is saying is 100 million to 250 million. So we cannot really say which one it is as of the moment.
Interesting.
Yes.
Again, I know the word there is turnover. That was in the old law. It's still saying turnover, B. That means revenue.
It's saying revenue.
Is it revenue or turnover?
It's saying revenue.
Okay, so that just means that if the sales I am making is the sales that qualifies me as a company? Is it sales and assets together, or just sales alone qualifies?
Both. So sales and assets.
So if I'm at home, I have a computer and I have a laptop, I have generator, my total assets 50 million naira. But I get lucky. Somebody wants to come to Nigeria to do business. I'm the sales, I'm the go-between, and I get a commission of 1 billion naira. It's possible, right? So I made 1 billion naira revenue on assets of 15 million. So do I qualify, or because I have lower assets?
No, you qualify.
But you said two.
You're charged on your income.
But I don't have the assets. I don't have the assets.
But even if that money is paid to you as an income, you qualify. You will definitely.
No, but the question I'm asking is this, right? Because I heard you say that the turnover, the revenue, and the assets, they have to go together for me to qualify, correct?
Yes.
So what I'm saying that if I use 15 million naira assets to generate 1 billion naira turnover, am I a big company? That's what I'm going to.
Yes, but we're saying the same thing. Your revenue is your turnover, right? So that's revenue there. That's 15 billion. So you use, let's say you invested 15 million naira and you got 15 billion. Of course, you fall into it. Doesn't matter. You fall into a taxable category.
So one side.
So they are looking at the revenue you make, not the money you use in investing to make that revenue. It's the revenue you make at the end of the month or at the end of the year. This is what government is taxing you on.
Understood.
Right? So yeah.
But what I'm saying is that both of them have to qualify. So what if one of them does not qualify and the other one qualifies? If I have revenue of
one has to meet it.
One has to meet it. Okay.
One has to meet it.
All right. That's what I was going to. Okay. Yeah, so we've left income. I don't think there's any other thing I can think about outside income. Let's now go to expenses. Or is there anything with income you want to talk around before we get to expenses? Is there any other issue with income as an SME person has to be aware of? Does the taxman say we have to file income or please go ahead.
Okay, so let me talk. I'm looking at my slides because I think I was talking offhand and I wanted to look at my slides. Okay, so very important is I will start from your operating deductibles, right? So
we're going to expenses now, right? So
expenses.
Okay, so now we've done revenues. I made in 100 million revenues, right? Now expenses. Now, what does the law say about expenses? What's the general language?
So let's say you make 100 million revenue, right? So the law says that your expense there will be your expense deductible will be allowable. No, your expense deductible will be all of your gross profits minus cost of sales divided by cost of service.
You're going to you're doing accounting for us. So just to say wholly and exclusively, right?
Okay, yes. Okay, wait, let me make it. Let me make
wholly and exclusively
and
used.
Exclusively.
So essentially, if I have an expense that I used to make that 100 million, I can claim it. Is that a simple way to say it?
Yes, you can.
No issues.
If you have a receipt, you can claim it. Yes.
So if I have a receipt.
And your tax can also be 0 as well. You can claim it. You can make turnover of 100 million. And if you have a good accountant, legally, right? There's nothing illegal about it. If you incur the expenses, they are wholly and they are exclusive. You can prove it, right? At the end of the day, you can end up paying 0 on taxation because you're not going to spend your money, like you have to take away your expenses. So the taxman is not looking at your revenue as a whole, although it's like a snapshot to say, okay, you made 100 million. If, for example, now, okay, this is where the presumptiveness comes into. I will go back to that point again. So the law says that the taxman has the right or the discretion to look at people that fall into the presumptive tax. So presumptive tax, the law says that if a person, right, that does not keep an accounting books, that doesn't know an account, let's say you're a novice, you don't know nothing about accounting, and you have a business account, and let's say that business account, you use 10 million naira to start the business, and the business now makes 20 billion, right? The law says, in this case, the law can look at your whole account statement because you do not have records for anything. And the law will tell you, okay, for this money, you will either pay 6% or you pay 8%.
Oh, because I didn't file, they would presume.
No, you filed.
But they didn't agree with the filing.
You're not physicalized because you do not know accounting. So the law is penalizing you for not knowing accounting and not getting an accountant.
Wow.
So if you do not know accounting, you do not get an accountant, and you just say the ethical attitude, anyway, it's easy to just give the lawman so normally what happens is I do it as well in my former businesses. I just give my business statements, my statement of account from my business account, and then it goes through the taxation processes, right? And I pay my tax. But now it cannot be done this way anymore. Right? You need somebody to do the proper accounting. If you say, oh, I don't have any statement, I don't have any record, I don't have any receipts, I just have transaction records in my account. So the taxman cannot look at that your account and say, this account, 6%, you pay 6% on your total turnover.
Okay,
or you pay 8% on your total turnover.
Let's be very clear what you're saying, and I hope folks are understanding what you're saying.
Yes.
If you make all these profits and you do not have a professional that would arrange your books of account and file those taxes, the taxman, even if you file and you just don't do it properly, the taxman can say, we disagree with this filing and we're going to give you a different tax to pay. The point here is that you've got to seek advice. You can't just assume that there's debit, credit, and I'll file taxes. You've got to seek advice. Make sure someone that is trained is looking at your books of account. That's what I'm hearing from you here.
Yes, you have to. You have to, because this is where the presumptive tax comes into. It's presumptive. Okay. Yes.
Question
so you don't have receipts. Yeah.
Yeah, before you go ahead, someone is just asking here, if I do graphics design, I'm at home, do I qualify as under the professional services label? Why he's asking is that because the tax law exempts small business below a certain turnover except professional services. So he's saying it's graphic designing a professional service.
Okay, so how do we know? Let's even forget about whether it's professional or not, right? You make income. The taxman is talking about the income you make, right? Whether you say it's professional or it's not professional, that doesn't really matter. You're a graphic designer in your house and you make an income that is less than the taxable band. The beginning of for taxes, I think it's for 20 million and above, pay 20%, or 25 million or 20 million. So we're not sure on that yet because we don't know which one that we're working with, because the federal government and the NAS, we all know what's going on there. So we don't know. But let's assume it's 25 million and you are a graphic designer in your house. As long as you don't make up to 25 million, right, you don't pay tax. But you must file. The fact that you don't make 25 million doesn't mean that you're not going to file your taxes. Even if it's zero, the law requires you to file your tax. So as a graphic designer in your house, you only file once a year, right? So once a year, you go to your state where you live. You have to file through the state IRS. You go to your state. Please, everybody, if you're listening to me, go and get your TIN number. You need it. You get your TIN number, you file, right? You will see the process, or you will see how they ask you to file it. So whether or not you make, what is it called? You make 20 million, that's less than the average that government wants to tax, you need to still file your tax regardless. But yes, if you fall below, then you don't pay any tax.
Yeah.
So they're only talking about people that are above the threshold, not people that are below the threshold. And same go for companies as well.
Gotcha. So I think so I think what he's going to is this, right? All this stuff we're talking about exempts professional firms like lawyers and accountants. They can't really claim most of these things we're talking about. That's what he's going to. So I think he's trying to ask if a graphic designer is going to be looked at as the same as a lawyer and as an accountant. I don't think so. I don't think so.
But the law doesn't really focus on that, because he's quoting one particular place, but he's not looking at the other law, the other things that precede it, and the one that goes after it, right? What he says company income tax is if you make below a certain threshold, which is either 25 million or 50 million, you don't pay tax. So whether you're a graphic designer that's in your house and you make below that, you file zero.
Okay.
So the fact that you only make, you don't meet that threshold, you still need to file, and you still need to file that zero.
Gotcha. But we're going to stop at 11 so I can get questions. But let me also ask, let's go back to income. What if what if that company sold a building? They had bought a building at 100 naira. They sell it for 1,000 naira. They make capital gains tax. What's the law say about capital gains tax?
Okay, yes. So let's go to capital gains tax. Give me a minute. So capital gains tax, what the law says there is, if you buy a building, right, there's schedules for the capital gains. I mean, for the capital allowance you have. So when you buy like a building, and let's say the building is 500 million, the law says you have the first schedule, which is, I think, is about 10%. I'm trying to go through my slides to get to that particular place. It's about 10%. So it has 2 points, right? So the first schedule and the annual schedule. So you have to do the first one and the second one. I think all of it will be 25%. Then you deduct it gradually over a period of time. You don't take all of the money if you buy a house. You don't deduct it, all of it, from your business expense. You have to deduct it bit by bit yearly. And I think the first schedule, 10 and 15, then I think it's 25%. So you don't deduct, if you buy a house of 500 million, you don't go straight to your accounting and deduct all of them for capital allowance. There's a threshold that you would deduct if you buy a house, if you make capital expenditure.
So there's capital allowance when I invest, correct, right? So when I invest in capital assets, house, tractor, waterworks, I get capital allowance more or less. Then if I make a profit on the sale of an asset, I pay tax on that sale. That's what I'm going to. Like if I sell my head office, I pay profit on that sale if I make a profit. That's capital gains. That's what I'm asking. So that's also taxable, right? The gain on the sale of an asset is taxable.
Yes, it is taxable.
Okay.
It is taxable. It is taxable. So they say capital gain is taxable, but it's taxable. It says it's taxable by 10% of the profits. But before you go to the capital gains tax, remember,
I think it's 30%.
No, subject to 10%. Capital gains and losses. No, it's subject to 10%, not 30%. 10%.
Okay.
10.
All right.
Yeah.
Okay, fine.
Subject to 10%. Yes.
Before we run out of time, let's just touch briefly on VAT and withholding tax. Walk us through, because lots of people are now saying, I've seen on Twitter, I went to the market, I got charged the VAT. Walk me through VAT and withholding tax. As a small SME, who can I just I have to charge VAT? It's mandatory, or
no?
So walk me through.
Okay. So first of all, if people want to ask you, if people want to take VAT from you, please ask them. There's a government website that you can confirm if the VAT number is correct. So if you want to come and buy services from you, or you're buying something from, let's say you're buying food from me, and I'm telling you that, oh, I'm putting VAT. The first thing you do, look at the receipts, right? On the receipt, people that are authorized to collect VAT from other people, from other businesses or individuals, you have to be registered first by FIRS. You have to also not just be registered. Before you register, you need to meet the threshold as a business. You need to be doing a certain turnover, right? You need to be doing at least 25 million turnover for you to be able to charge VAT on your customers.
Hold on, Belema.
Yes.
So you are saying if a shop in Aba that is just making 5 million naira turnover cannot charge VAT?
No,
you can't charge VAT.
No, you cannot charge VAT. And you know what? It's easy to find out, right? It's very easy to find out. You can go. What will happen is, I think my social media handler is here. The questions, please listen. I know you can hear me. My PayPax, my social media person at PayPax, write down these things for me, so I will give it to you later. There's a website where people can go and search for companies that are authorized, a government website to take VAT. So if somebody is giving you a receipt, look at the receipt number. If that person is not authorized, once you go and put it in the government website, you will see they will tell you that this person is not authorized to take VAT from you. Do not pay them VAT. So if the person is not authorized, it's easy to find out. You don't need to make arguments. Quickly go to the website. You have your phone. Put their VAT number. So the first thing you ask them is, do you have your VAT number? If they say yes, registered VAT number. If they say yes, say, give it to me, let me search. Okay. You search it. If it's not correct, do not pay them VAT. They are not authorized by government to take VAT from you.
Okay. Second one I heard also was that as a company, as an SME company, right? If you pay for VAT, or if you buy an asset and that person did not pay import duty or VAT on that asset, that you cannot claim it on your balance.
Oh, yes. Okay, yes. So, for example, I pay as a company, right? When you make expense from the company, they have VAT input and VAT outputs, right? So the VAT input is when you buy from somebody, right? When you buy from somebody, and the person is removing, you paid a certain a VAT of 7%. I record it on generator. I cannot click because the receipt is not correct. So these companies that are this company that has big expenses, they are the only ones authorized to deduct VAT back from the taxman. And if the taxman gives you the VAT back, you have those VAT output and you cannot claim it. Okay. So this is why it's very important for you to go online and search to make sure.
Let's pause here so we can get folks to hop and ask questions. Guys, if you've been listening, we've been talking about personal finances and SME taxes in our tax space today. We've got Belema also sharing those insights. We want to make it a bit of a practical session, not too much on the act, but on more of the operations on the SME folks. Let me get Optimist of the universe to ask his question. We've got Belema, we've got myself here, and then we'll do Ben and then we'll do Ashola.
Now, my question is about the capital gain tax for small companies. For instance, if I buy a stocks and there's capital appreciation, or there's an appreciation on this stock. So if I sell this stock, so will there be capital gain tax since it's a small company?
Right, 150 and 10.
Yes, you're correct. Yes, 150 million.
The total. Yes. Look at it in terms of a gross, Optimist. Look at. Say, let's say the whole share has got to be gross 150 million. It's only at that limit that you pay taxes, the capital gains tax. If you're doing below that, you're not really worried about capital gains for now. It's mostly for big boys in code that
payroll from your staff, you're going to pay it by yourself.
Thank you, Optimist. Ben, you've got the floor. Ben Awoks.
Yeah, Kalu, my friend, thank you very much. Greetings to Belema. You really touched a lot of very technical aspects of the law. Myself, I've learned a lot, tax is part of what I do, at least. But I come in from a broader compliance aspect. I'm very happy that you mentioned the industrial training for ITF. And there's also the NSITF.
Yes.
We're still paying those things. We're still paying those things.
Yes.
Without these things, these are that BPE stuff you have to do. Said if my total assets are, let's say, 20 million now as a company, and I do a business and I get paid 1 billion. 1 billion plus whatever was there.
That's a good one. Yeah, that's a good one. So you are saying that cash becomes the asset that they are using.
Yes.
Okay.
The government is looking at cash.
Okay.
They're looking at cash.
Okay. Makes sense. Makes sense. Thanks, Ben. That makes sense.
Yeah. Exactly. Cash that you have it.
Yeah, but I would have assumed that they would have said.
So thank you. I just came to.
No, Ben. I you are right. I would have thought they would have said, "Oh, his asset is 15 million naira computer." But now you are saying the turnover itself.
Can I say something before I forget? I was just looking at my slide now. Right? I was going a little bit of accounting, right? When you deduct your allowable expenses, you can also deduct your interests. Okay, this is important. Let me touch on it. An example now. You are a business person. Oh, this is a perfect example. You are a business person, right? You borrow money to your company. The law says that when, as a business person, you borrow money to your company, this is a capital capex. It's a capital expenditure. Right?
So, sorry, Belema, are you saying you as a person,
you lend
your company money?
You lend
to your company.
Of course, you. It's not free money because it's not.
Continue. No, Ben. Make the point, Belema. Make the point. Belema, make the point. Just make the point.
Mr. Kalu, let me say this. Let me say it clearly. Ben, you have a company. Right, you invest 10 million in the company. Are you not borrowing that money to the company? Are you giving the company free money?
No, make the point. Go ahead and make your point.
Okay. Let me make the point. Okay. So once you what is it called? Once you borrow money as a business to the company, right? What the law is looking at, the law is talking about related persons and third-party loan. Remember, all business expenses are 100% deductible. But loans are interest deductible, right? So those interests that you deduct from the loan is 100% if you're collecting that loan from a third party. So if you collect the loan from the bank, you will deduct the interest 100%. But if you collect that loan, if me, Belema now, I give my business papers 50 million naira, there's a cap to what I can collect for each year.
What you can claim.
Belema, yes, that I can claim back.
Interesting.
Yes.
So,
but if it's a bank, I can take
100%.
I can take all of the interest 100%. I can claim it back from my
Gotcha. Because the law, you are right. The law says any sum payable by way of interest on debt employed in generating the income of the trade, business of vocation is allowable. That's what the law is saying. So you are saying that if I do this exact same thing, but I am the one, not the debt is coming from me.
Claim it later. You can claim it like continuously, but you're not going to claim it immediately to third of adjusted profit. So you cannot just also claim all of them at once. So when you finish doing your accounting and you have 2/3 of your adjusted profit, right? You will now take 2/3 of that is what you will now take as capital allowance.
Question for you. Is this thing in your app or in other apps? So because most of the guys, someone is telling me, I don't know what you people are talking about.
It's like everything.
Right. So as an SME guy, what I'm hearing you say is that if I want to finance my company, it's preferable. Is it what preferable now? If I go to a bank, I can claim the interest as a deductible. If I go to myself,
100%.
if I use my own money, I can't claim the interest as a deductible 100%. That's what I hear you saying.
No, 100%, not at once.
Not at once.
You claim it continuously.
Understood.
Not at once, yes.
Understood.
Not at once.
Okay, let's.
Good evening.
Good evening, sir.
Kalu, well done for this space.
the discussants tonight, but I want to quickly ask a question before I go on to what I want to discuss. Is this space?
So it's down the flyer, correct?
Oh, okay. So don't let me dwell too much on that aspect. But I just want to clarify like one or two things that she has mentioned. It would be better going forward, to be quoting from those laws. Because
I don't think
I said we don't know. I said we don't know what it is because right now it's debatable.
So there's no clarity there. For
the sake of CIT, you mentioned it's still at 100 million naira based on the provision of the section 56 of Nigerian tax. So that's that on that. And some of the key statements you've made under the provision of Nigerian Tax Administration Act, NTA, Section 6, subsection.
So let me ask you, Ashola, what are you saying? You are saying that if I'm a trader and I have an app that calculates.
The problem is this.
No, hold on.
When you want to file your returns with Nigerian Revenue Service, there should be stamp of a recognized.
Yeah, but you're not filing with the app. You're not filing with the app.
No, you are. Let me.
No, I just want to clarify something because again, the space is an SME space. People that are here are folks that do not really know, understand. You've heard Belema talk about if you want to pay VAT, check if VAT is whatever. If there's an app that allows you to check if VAT, the guy charging VAT, we don't have to wait for that guy to be quote unquote tax compliant before we go to that app to see that guy charging you VAT. It's tax compliant. We've got to do our own homework. If you want to file, you even not with this tax act, you cannot file with a non-chartered accountant, can you? Even in the past act, you still have to go back to a chartered accountant. So I don't want us to get too dogmatic on this. Yeah, with this, Ashola. What you're saying is factual, but you still have to file with a chartered accountant. You can't wake up and just say, I want to file my tax as an SME, a limited liability company, and say, okay, boom, take IR. If you do that, you're going to get hit with a fine. That's what Belema emphasized. If you go and file and you do it wrongly, you are opening yourself up to a presumptive tax number. So you can come back, sir. Mr. Shule, you want to come back for Belema maybe response?
Okay. So when you talked about the app, remember, it's the app that things. So yes, you're seeing the app, but the app has staffs because we're also partnered with Remitter, right? So if you do your tax proper accountant, do you have an accountant in your business? You say no. Then the system is filing it on your behalf. If the system is doing it, as a system, we are qualified to do it because it can file this thing for you if you want. If you make maybe an in-house request, you want this accountant to do it personally for you, they can do it. And if you also want to do it on your own, you can also do it.
A tax. That's what I hear him saying. Yeah.
Yes. The app itself was done by chartered accountants working with PayPax. Okay. So for example, now for a company, a digital company, to have people's an NDC, PDC, something like that, I need to be compliant with them. So I have the compliance certificate on behalf of I can now employ a DCO. I can. Yes. I did. I filed personally, and I'm the one. Yeah.
So shall I agree? Yeah. All right. Perfect.
Thank you, Kalu.
All right. You're welcome.
To wrap it up, NTA 2025 is saying 50 million. Why Nigerian tax?
That's what I said.
When that version you are reading, when
going for that,
then please hold it. Then please hold on. There's no version. We have to wait for the Gazette. Yes.
There are 2 or 3 conditions to be. You have a turnover of 100 million or 50 million, which is yet to be clarified. Or your fixed asset. If you said you are a small company and you have a fixed asset, or law says you are not a small company. And lastly, if you are a company registered with the CAC as a professional service, you are not a small company. You pay. You qualify to
these
pay.
These are the lawyers and accountants, right?
God bless you,
can you repeat yourself?
Cost of it is either your turnover is 100 million fixed assets exist, you registered as a professional service.
Mm-hmm.
You are not, irrespective of whether you meet the threshold or not. As far as you registered as a PSF, you're not a small company.
Yes, correct.
I like that. I like that.
Yeah.
That one hits me. That one hits me because I have a consulting company.
Yeah, that I think I was making that point again. So again, just to be clear, right? I'm shying away from mentioning numbers, Mr. Ayala, because we don't have the numbers today. Even Mr. Ayala was saying he wants to get the physical printed gazette. So you are totally on point. Let us folks be aware. We're just shying away from saying 50. We have to get the real physical one because of what's going on. But fantastic, sir. Thanks, Mr. Shola. I really appreciate your contributions. Let's get is it Peter? Peter Offum. Peter, how you doing?
Conversation so far. We are really learning a lot. So I wanted to ask about
slides, but not immediately. I'll share it later. I'll share it after this space. Just forgive me. I'm supposed to give Mr. Kalu this slide, but I'm a new mom, so my baby's not letting me breathe. Because of that, I could not provide this slide. I will share this slide to you. Then on this one, so what the law says, and
dividends distributed by authorized collective investment scheme, unit trust, private equity, venture capitals, and ETFs. Those are going to be exempt from your income. So if you buy a mutual fund or an ETF in Nigeria, collective investment scheme registered by SEC, the dividends you get from them are not going to be taxable to you. That's what they're saying, Peter.
All right. Okay, so are you treating the dividend as the returns? Assuming you have money market on
the dividends. The money market will give you return. Your yield, they will give you either coupon yield or equity distribution. That yield you get, the dividend they give back to you from the collective. It has to be collective, not you going to buy gambling and crypto. So they are doing this to allow you to go in the tax benefits. Try to buy the ETFs, the unit trusts, the mutual fund, not the individual stocks directly. If you want to put money in the bank, maybe you want to look at a money fixed deposit. But remember, federal government bonds and state bonds are exempt from taxes. If you want to avoid taxes, you go for bonds, you go for collective schemes. If you just want to address and get your income, you chase collective, individual stocks.
Yeah. Okay. So another thing again, in PayPax, we have our investing arm, and we have investment partners that are what's it called, Codros. So if you're investing with PayPax, our investment partners are giving you money market of 18%. You can invest in you can invest in sovereign wealth, you can invest in euro bonds, you can invest deposit. But one very interesting thing about about the money market, your money market is like every day, the profit that is made on that day when trades are made. So you make your profit every day. So if you have maybe 20,000 or 10,000 on your money market accounts, if maybe the trade for that day it can be 10%, it has never gone below 15%, but usually it's between 15% to 18%. So maybe today on 10,000, the trade might be 10% or 15%. You make that money. So every day on your money market, you're making money. So I don't have enough information about investing, but on the 24th, if you're in Abuja, we're doing our launch party. Right? If you go to our handle, you will see it there. We have our investment partner coming to talk about everything that has to do with investment. So if you don't want federal government to take your tax, the best place to put it in money market, in life insurance, put it in pension fund, put it in NHF, put it in all these places. If you don't, federal government will take your money. You pay it in tax.
I mean, it's this is what happens all over the world, Peter. It's called a tax mitigation strategy. So again, it's going to be down to your liquidity. If you make income, so that way they can reduce their above the line income. And if you understand what I mean, you file, see the taxes you're going to pay. Maybe you do Tubo tax. If you file on Tubo tax, it'll tell you these are your taxes. Then you go back and go and buy or contribute to your IRA. So that's a legal way to, is that you pay tax or you invest in yourself. You choose one.
Yes.
The money will still go out. Either you pay tax or invest in yourself. All right, Peter.
Either you give government or you invest.
Fantastic. Peter, you're good? All right, let's get Dollar. Peter, you're good? Good. No information.
I'm fine. How about you?
I'm doing very well, so thanks for asking.
All right. And when someone was speaking earlier, I think he has left the speaker stage. I wanted to direct this question. Struggling with the definition of professional service. And since he used that phrase,
not oath per se, that maybe you are qualifying, like an accountant, a architect, dentist, doctor.
Can I come here?
Go ahead.
Regulated professions, right?
Something like that.
Yeah. The memorandum of associations of the memorandum of association. Those objects are basically those objects explain in at least legal terms what the law will see as the activities that this company or this legal entity is carrying or it was created to engage in. So your business activities will be outlined in that object. So if you want to know if you're a professional service firm or not, you go back and look at your objects. If your object states there that you actually engage in professional services or auditing or whatever the case may be, if it's there, then you're going to be seen by law, by the CAC and by the NRS as a professional service firm. But if it's not, then you're not going. So it all matters on what is inside that those your objects, what's inside your objects of your memo. So that is the bottom line. You can talk about what you're doing or what you're not doing. The bottom line is what is in your objects. That will determine how the law will see you, and that will also determine how much you pay. This is an issue that I've also taken to some of the authorities too, because like I said, I'm running a consulting company too. So we're trying to, even as an industry, we've been trying to we almost got VAT exemption, but they didn't even, and there's PSF in your objects, then you can't qualify for some of the, benefits.
All right.
So yeah, I don't know if that clarifies it.
Okay. Yeah, that really helps. Thank you, Ben.
Can I say something? I think the focus should not solely be what you qualify as. Maybe you are a PSF person. What you should focus on, I think the law focuses solely on your income. So whether you're not registered as a professional service person, maybe you're a barber on the streets, right? But your barbering salon is doing so well that you make above the trade. It doesn't really matter. So you don't focus on whether you are a professional service person. You should focus on the income that you make, the turnover that you make within a period of time. This is what says whether you are interested in.
Okay.
Yeah.
I can't really hear Belema. I don't know if it's just clear.
Yeah, she broke up, but I PSF, these things don't apply to you. That's what they are trying to say. So if you're not auditing for you, that's just it. Yeah. Look at Adeola.
Good evening, and thank you for hosting this space. You and Belema, thanks for the explanation so far. Okay, I wanted to find.
You're jumping many guns here. You're jumping many guns. Where are you working?
Okay, this is you working, say, in Angola or in Qatar, for example.
So how many days do you live in Nigeria?
So typically rotation is 20 half of the year in Nigeria.
Okay, so look at where I'm going to with this, right? You only pay tax if you are a resident of Nigeria. So if you spend 183 days in Nigeria, or your permanent home is in Nigeria. So irrespective of where you work, if you work in Qatar, in a rig in Qatar, but you spend 183 days in Nigeria, or you have a economic terms in Nigeria, then you are going to pay tax in Nigeria. So that income you make foreign is going to be income that you pay tax on. The question for you now is this: because it's salary, it's not dividend, so you can't claim export earnings. So it's pure salary. I think you're going to pay PIT. That's what I think. Belema, what do you think?
Yes, the thing is, whatever it is that you're paying tax, let's say days outside of the country and you do remaining days here, there's something called tax credits, right? So whatever thing you pay in that country, when you file your tax in Nigeria, it's going to be either reimbursed or you will pay more.
But he will pay PIT. So the point is that irrespective of the tax credits, maybe double tax, he's liable to pay PIT. He will
not be double taxed.
I hear you, but I think there's no PIT. Let's assume there's no double tax agreement with Nigeria and Qatar and Nigeria and Angola. you are going to pay PIT in Nigeria, even if you end that income in Angola. Adela, does that make sense, Adela?
Right. So when she said no double task, so if Angolan tax law applies and I've already been taxed in Angola, and then I come back to Nigeria, and based on if family ties, you pay.
You will not be double taxed.
No, but he's saying double tax. Right now, I'm going to Google it here. Double tax.
Countries that Nigeria has DTTs with, that's double tax treaties. Irrespective of scenario, what you're going to see is you might have to pay the tax first, but then you will do some feature filing and you get the refund.
You guys are giving him hope. You guys are giving him hope.
But that unilateral relief, I will find the section in the tax act that talks about it so you can read it.
Adela,
that unilateral relief protects all Nigerians against double taxation, even when the other country does not have a DTT with Nigeria. So I just wanted to clarify.
Listen, he asked a very simple question. He asked a simple question. He works in Angola and Qatar. Will he be taxed? Yes, he'll be taxed. Those countries are not listed here. So all this probably I'm going to do later in Ben, all this you're going to do in natural. He has to file tax for that income in Nigeria because those countries, Qatar and Angola, is not listed here in the countries I've named.
Yeah, but is he a resident in Nigeria? So
I'm just giving you his. He has to answer. I told him if he stay 183 days in Nigeria, or your partner. Ben, let's not interrupt. Please let him learn. He's asking a question. If you stay with you have family ties or a business in Nigeria. Number 3, your permanent home is in Nigeria. Then any income you make in Angola or Qatar is taxable in Nigeria.
A primary residence, but you live in Angola, but your Angola residence is not declared as your primary residence. You're not going to pay tax in Angola. You pay tax in the place that you declare as your primary residence. So even if he works in Angola, but Nigeria is declared as his primary residence, he's going to pay tax in Nigeria.
But if it's an American,
the tax credit comes in, right? Let's say he's an American and he pays that tax, but he's giving his own residence in Nigeria. So there will now be like what is it called? A tax credit.
Okay.
For either you pay too much, then the taxman here in Nigeria will not bother you. If you pay less, then you have to now pay the remaining one to the Nigerian government. So for me now, example, right? My primary residence is in Belgium. So I'm working now. In fact, this is also my own case. Okay, my primary residence is in Belgium. I'm working and I'm making my living. So I have to pay tax according to the Belgium law, right? Because I have to do this to also stay compliant. I have to pay the Belgium law tax. But let's assume that the taxation in Belgium is lower than the taxation in Nigeria, right? I'm still going to pay the balance to the Nigerian government.
Yeah, I don't want you guys to make this thing a bit complicated, right? So
no, it's not complicated.
Yeah,
listen.
I don't make. I'm reading the DMs. So look at he's asking a question many Nigerians are asking, and because he's putting Qatar and Angola, it looks a bit. He's asking if you are a Nigerian, that maybe you import cars from Belgium, you go to Belgium, you import trucks, you go to Belgium, you import trucks. You stay 50 days in Belgium total. You live in your family house is in Ikeja. Your wife is in Ikeja. Your kids are in Ikeja. But you are spending nearly half the year in Belgium. Is he going to pay tax? The simple question is
almost doesn't count. You pay tax.
No, but I know. I'm just saying the simple way to answer is this: where are you a resident of? That's a simple question. Where are you? Once you determine your residency, then you ask yourself: is that country? Do we have a double agreement? If this question, if you were saying he's in Spain and Nigeria have a double tax agreement, so he's fine. He will not pay tax in Nigeria because whatever he pays in Spain, he will claim it. He'll deduct it from Nigeria. It's clear, simple. If it's in South Africa, yeah, it's there. Spain.
Wait.
Kalu, this is what I'm telling you now. There's unilateral relief that goes beyond DTT.
Yeah, but you are going to unilateral that he's not asking. He's asking, will he pay taxes?
Him and I have the same situation now in this regards of taxation. So I am making my income from Nigeria, right? Example. And I live in Belgium. So my primary residence is Belgium, not Nigeria. And whatever salary I pay myself living in this country, right? That's money. Even if let's say Nigeria, okay, let me do it the other way. Nigeria is my primary residence, right?
So you're going to pay tax in Nigeria, Belema, because
yes, I will pay tax in Nigeria. That's my primary residence.
That's it. End of story.
Yes.
So end of story.
Hello, what Kalu said is the definition of whether someone, if you're permanent resident in Nigeria,
exactly.
why you are in Nigeria for 100 and how many days?
83.
83. That is the real definition
Simple.
of if you have to pay tax in Nigeria. Now, those credit unilateral, whatever Ben was talking about, if for those that stay in countries that we don't have
tax agreements with,
this double tax agreement with, like someone staying in Saudi Arabia, this is a place that they don't pay. That means if you have spent 183 days in Nigeria, you will pay tax. If you don't want to pay tax, that you want to live under the tax relief in Saudi Arabia and some Arab countries, that means you don't have to spend 183 days in Nigeria. You don't have to have economic ties or strong family ties in Nigeria. Thank you.
And that country does not tax you. Nigeria will tax you. That's what he's explaining. It's in the tax law.
Exactly.
For non-residents, here you too. Yeah, for non-residents. And Nigeria is not. Nigeria will tax you. That's what they are saying in the tax law. So they've even got further to even make it that you can't even dodge. So if you're in Saudi Arabia and they give you exemption and you don't pay, Nigeria will tax you. So be very careful about that.
We're talking about double taxation.
Yes, now Adeola asked a simple question. He works in two countries. They quoted the countries for us. He's asking, will he pay taxes? So
the question was about double taxation.
So
that's you.
Ben, the answer is this. Where is Mr. Adeola a resident of? Once you answer where he's a resident of, it answers itself. If Mr. Adeola was saying he's working in Spain, end of story, because Spain and Nigeria have a DTT. But Mr. Adeola is not working in Spain or South Africa or Philippines, or he's not. He's working in two nations that do not have DTT with Nigeria, which means we don't have to go to the residence and say, is he spending 183 days in Nigeria? Yes or no? Does he have family in Nigeria? Yes or no? Does he have this Nigeria? Yes or no? Does he have a family permanent address in Nigeria? Yes or no? Those countries or Nigeria, it's a simple determination. You don't have to argue about it. The law is there. Fill in the blanks. And I'm sure Tadela, I think you're a bit clearer now, right? You're a bit clearer now.
Yes,
it's not, the law is there. He can be posted to Spain tomorrow, right? Mr. Tadela
So the conditions are either or. So if I don't do 183, but I have family ties, strong family ties or what have you, I still pay tax in Nigeria.
Correct. Those four things. So if you spend one day, but you have a family permanent address, that's what Ben is, permanent address in Nigeria, they are going to pay Nigerian tax, but your permanent address is in Nigeria.
Yes.
If your family, if your wife is in Nigeria, your kids are in Nigeria, but you spend 200 days in Italy, no, you have a permanent, your significant family is in Nigeria. You see how they are catching us? No escape. So if your family,
question. I want to ask a follow-up question on Adeola's case. Let's say, for instance, is Angola government has taxed him, and they tax him maybe 15%, and and in Nigeria now he has spent over 183 days in Nigeria. So Nigerian government is to tax him based on his income threshold 20%. So if we factor in the 15%, is he going to pay the remaining 5% to Nigeria?
No, that's what Ben is now saying.
You're talking about double tax.
This is where Ben's of that you go and get clear,
Exactly.
that will come in. Because that's where you now say
if you know what you're doing,
he's going to
for you to avoid double taxation. That's just my point here.
Good. He's going to.
My question is
where you pay.
He's going to pay. No, you guys don't all talk.
That's my focus.
Ben, you want to
Don't all see. Answer the guy properly. See, if he's foreign, he will pay the tax in Angola. He will pay it. Then he will go and file. If you keep on saying you can go and file, you're not answering him properly. You say, oh, no. He will pay the taxes in Angola. Then he will try. There's no guarantee Angola will give him back the money. Because Angola is going to say, you are a resident here. We have no DTT here. Pay and go. That's the point I'm making. America will give you back. Will Angola give him back? There's no guarantee. There's no DTT. So
double taxation. Can I say this? Double taxation simply involves two countries. If for whatever reason you've paid in Angola or whatever the case may be, if Nigeria decides not to tax you, you have been safe from double taxation. Nigeria can decide not to tax you based on evidence that you've paid in Angola.
It doesn't work that way, sir.
There's a process. Okay, if you believe so,
there is an agreement.
That's what I know people do.
There is an agreement.
I think I agree with.
Why do countries sign an agreement? Two nations come together and sign an agreement. You're saying that no, it doesn't work. Two nations come
let me
together.
make my point again. It's like you missed my point. Let me make my point again now. Two nations come together to sign a double tax treaty. Now, one nation called Nigeria has created a unilateral relief. That relief means that if you're in, like in this guy's case now, if you're working in another country and you now pay tax there, you can bring the document you used to pay tax there and give to Nigeria.
But he's going to pay the tax. That's his question.
Nigeria will give you a
yes, but Ben, you are going to number two. He's asking you. The question is, will he pay the tax in Angola? Yes. He's not. He wants to know where he will pay the tax first.
When I started talking, I'm focusing on how to avoid taxation. I'm not stressing on.
But that's not his question.
And where you not pay.
Okay.
Let's on how to avoid double taxation.
That's just my own. But do you have a follow up?
Kalu, let me just say this. Now, the agreement we have with Canada, US, and the rest is, let's say your threshold is 15% in Canada, your threshold is 20% in Nigeria.
Yeah.
The moment you are paid in Canada, that is all.
Correct.
But if you come to Angola that we don't have anything with, you've paid 20% there, and in Nigeria you have to pay 25%. You will still pay the remaining 5%. But if in Angola there's if it's in Canada and other countries that we have agreement with, you are not going to pay anything. Same way, we don't have agreement with Saudi Arabia because they have tax relief. At that point, you pay 100% here in Nigeria. So if you are living in a country, let's say you are in Zimbabwe, you are paying 40%.
Wow.
In Nigeria, you have to pay 25%. Nigeria will not refund you. They just get the evidence that, okay, you've paid over there. But the bottom line is that, you will still fight tax. So at the point of filing tax, then
that's why you state all that stuff.
Quadri, I have a question for Quadri. Okay, so Quadri, what do you think the new unilateral